Well, hello, everyone. This is Bruce at Fleet Capital Management. It is Friday afternoon, the 4th of November, 2022, and we are going to take a look at the markets. It was a wild week and a wild day. I'm going to show you all of that, try to show you where we are with the markets as far as trend. And then I'm going to show you some of the trading that we've done. Excuse me, still have the cough. Some of the trading that we've done this week, because we've been able to find some really good stocks that are working well for us. So I'll show you all of that. Of course, the video presentation is intended for educational purposes. The discussion of any security is not a recommendation to purchase or sell the security. Please subscribe to the channel. If you have any questions, I'm always here. Just shoot me an email and I will always respond as quickly as possible. Just a quick reminder, our website, fleetcapitalmanagement.com, easy button on the right-hand side to get to our weekly market analysis videos if you forget how to get there on YouTube. And if you need to schedule a video call with me so we can look at particulars of your account, just click on that button and you will then be on my calendar. So I'm going to flip a couple of screens over here. This is my daily trend matrix that I fill out every day. We are now up to date through today. And what you will see today, I mean, before the Fed announcement, we were building a lot of green. If you remember, I told you that the only one that was still red was called the MTI, and it was red by a drop, by a hair, by almost 1 basis point. And I thought that was going to flip to green. But with the Fed announcement that happened on the 2nd, things started to turn red again, as you can see. But if you even look across these lines, you'll see some green. You'll definitely see some red. That seems to be predominant. You'll see some more green and then a no trade zone, which I'm going to show you. This is a very, very mixed picture. This is not a clear picture. Up here, this was a clearer picture. It was almost all green. But then we had the Fed announcement, and that took the market back down a little bit. I don't think it killed the market, but it made for a rough day. So that's where we are as far as that part of the trend goes. If we're looking at the S&P 500, by the way, in case you don't know, all of my trend analysis is always based on the S&P 500 market day close. If I were to look at the Dow or the NASDAQ, we get a different picture. So to be very consistent, it's always on the S&P 500. This is the go, no go daily graph. Just to remind you, the amber bars are the go fishing bars, meaning we don't know what direction the market's going. This light, whatever color that is a weak uptrend. The darker blue is a stronger uptrend. The pink, if you will, is a weak downtrend. And the purple is a strong downtrend, and these things change. They change from time to time. What is normal is you'll see us go from a strong downtrend to a weak downtrend to amber to a weak uptrend to a strong uptrend. And in a long-term uptrend, it will go from strong uptrend to weak uptrend back to strong uptrend, and that is normal. Even if it goes into amber, that is normal. But what we don't want to see is it switch back to the downtrend. And we've been watching this, and this has been happening all year long. This has been, like I've told you before, a lot of analysts are calling this the most difficult year in the last 50 to 70 years of stock market trading, but it will pass. But where we are now is, prior to the Fed announcement, we were starting to see some weak uptrend bars. And the really good news was we were breaching that 50-day moving average, which is really important. And things looked good. There was a lot of optimism prior to that Fed meeting. And then, unfortunately, here's the Fed meeting right there. Everything kind of broke down. We closed again below the 50-day moving average. We had a fairly tough day yesterday, but nothing remarkable. It was just sort of a following day of the big Fed announcement day. And today we had a pretty good day. Today was a pretty strong day. I wouldn't say it was over the top strong because remember, the dash or the tick to the right is the close, and the tick to the left is the open of the day. And you can see they were really close to each other. We gapped up, so we had a very strong positive day. The S&P 500 was up 1.3%. The NASDAQ was up about 1.3%, actually all three, and the Dow was up about 1.3%. It's hard to tell that from this bar because the open and close were very similar, but we had this gap up right at the open, which gave us those gains. But what you can see is we're still below that 50-day moving average. We need to get back above that 50-day moving average. Let me show you something else that is positive on this chart. Down here is the momentum oscillator. It's very normal that momentum will go up as the market's going up. When the market's going down, this went back to the zero line. That orange line is what we call the zero line. But it didn't breach the zero line and go to where it was showing us that overall momentum was weak. That's a pretty strong sign. If we can hold that zero line on momentum and then hopefully and possibly start to move back up, terrific. That's exactly what we want to see. So even though the market broke down with the Fed announcement, we are still at the zero line on momentum. And remember, price follows momentum. If this breaks down, then it pretty much tells me that price is going to break down again. But if it just rides the zero line, zero is zero. Zero means we're fine, especially in an uptrend. You'll see it go up, and then you'll see it come back to the zero line, then you'll see it go back up. And that's what we're hoping for. So that's a little bit of a bright spot. There aren't a lot of bright spots right now, but there are some. I will tell you, everything looks neutral. Everything looks middle of the road. If I go over to my market timing graph, this is another market timing graph, you'll see mixed signals. These three indicators are all below their what we call a zero line or a 1.00 line. They need to be above the one line to have a really strong uptrend. They're not very far away. They're just not very far away. This is called the DPO. This is a detrended price oscillator, is still nicely above its zero line. And the price is still above this 30-day weighted moving average. So there are positives. There are definitely positives that I'm seeing. Again, I'm not going to paint a rosy picture because we're like right in that no trade zone. We're right in that. And what that means is we don't know. No trade zone means we don't have a clear picture yet. Actually, if I go over to this chart, let me go to the S&P 500. Here's where you can see my ATR monitorings. And when we have red above and blue below, that's what I call the no trade zone, because it just means it's kind of going sideways, and it's got to break out one way or the other. You can see that today's bar, we're slightly below the 50-day moving average. We've got a ways to go before we get back up to that 200-day moving average on the S&P. So if we can break above early next week, the 50-day moving average, then I would say our next target is the 200-day moving average. And then we have to break that to be on a full-on uptrend. But like I said, we're just meandering right now. And I see a lot of fairly strong signals. Today's big up day also was greater than the 50-day moving average for volume. We're looking at volume here. That's good in an up day. So, you know, I think there's a lot of money on the sidelines waiting to get in, but we are in that neutral zone. It's probably better than calling it a no trade zone. Let me go over here and show you a couple of trades that we've made recently. XLE is in both Group 1 and Group 2 accounts. Remember, Group 1's a little bit more aggressive, Group 2 a little bit more conservative. We've been doing really well on this trade. We're way above the 50-day moving average, and where some of these areas were called resistance, they were ceilings, we've broken through resistance, and now we're just in a really nice uptrend. This line right here is not really called resistance. It's just marking the previous high. So don't get confused by support and resistance lines. That was the previous high. Now, a previous high, as you can see here, sometimes will psychologically act as an area of resistance. We got up to that high and we came back down a little bit, but that's okay. These are not hard to break through. Real support and resistance is harder to break through. But when I look at XLE, we've got a very strong positive DMI line up here. We have a very strong RSI line. Remember, RSI needs to be over 55. So I've just made a 55 line, and we are. So that looks really good. Let's go to another stock that we purchased. In Group 1 account, PACCAR, PCAR. That's done really well for us. We're above the 50-day. We're above any resistance, and hopefully just continuing to move higher. So that's another. Again, DMI looks strong. RSI looks strong, and I'm going to show you how it's making us some money. Iridium, I bought that in Group 1. I think I bought that this morning, and we had, excuse me, we had a really strong day with Iridium, our first day in the trade. Again, over the 50-day moving average. DMI looks strong, RSI looks strong, everything looks strong there. So, you know, I'm real happy about how these are working out. And as a matter of fact, I can show you, let's go to portfolios. Here is PCAR, PACCAR Industries. We purchased that on October 31st. So we've been in that just a little while, a few days, and we are currently up 3.07%, which is not bad for a couple days, given especially everything that we've seen happen to the market this week. These stocks that I'm buying seem to be bucking the trend, so that's good. Today, yeah, it was this morning, the 4th, I purchased this company, Iridium Company, and we've been in one day, we're up 1.85%, not a bad little rate of return. If I go to my ETFs, excuse me, here's that XLE. We bought that on the 6th of October. And we are up 12.24%. So that's been a really nice, strong one for me. I'll come back to the Qs in a second. Also, for both 1 and 2 group accounts yesterday, I purchased the ETF on the Dow, DIA. And so we've been in that one full day and we're up 0.75%, which is not terrible. I mean, it's a nice rise. QQQ. Bought this, I believe it was just Group 1 accounts. This was kind of a flyer, if you will. There was a lot of anticipation going into that Fed meeting on Wednesday. And on Tuesday and on Wednesday, I was thinking about adding stuff to the market because there was a lot of analysts said the market was going to really pop to the upside if we heard some encouraging news from Chairman Powell, which we didn't. But what happened is at 11 a.m. my time, 2 p.m. East Coast time, was the announcement of the rates and the initial announcement of Fed comments. Within, I don't know, within 5 seconds of 11 a.m. my time, I bought the Qs. And I did it because on my charts, it showed a really strong thrust to the upside that was coming. And within the first 5 minutes, we were up like 3 or 4%. We thought that was going to be a really strong winning trade. When Chairman Powell came out a half hour later and started making his comments, the market rolled back over and we are down 4% on that. You know, let me go over to the stops and I'll show you how we're not going to let it just hang out there. If I go to the Qs, we have a stop right down here. I put our stop right below the previous low. And here is that trade. Here was the Fed announcement. We went in, it went up, and then it dropped down. The next day, yesterday, it dropped down a little bit more. Today, it had a pretty strong day. So we'll see what happens, but we're really close to our stop. I'm not going to just sit there and let this thing linger. If next week we have some more strength and it starts to grow, well, that's great. And we'll start to raise that stop as we always do. Since we're on this page, I'll show you XLE. XLE, we just keep raising that stop. I probably raised it 7 times or 10 times. right now, this is kind of a comfort zone. I like to be just below the ATR level prior to the current ATR level, just to give it a little bit of room. And like I said, we've raised that stop probably, I don't know, here's XLE in yellow. And every time you see replace, that's where I raised the stop. And we don't lower stops, we raise stops. And we raised it again today, yesterday at 10:06 a.m. to 86.74, which is where the stop is right now, right there, 86.74. So we will just continue to ride this. This is a perfect example of how we want to ride a trend. We don't know when the trend is going to end. So if Monday, Tuesday, we get a new ATR dot here, then I'm probably going to raise this stop to somewhere right around there. And we just keep raising it. We just keep following the trend. Eventually, the trend will, we say the trend will bend and end. And if it does, we will stop out, but we will stop out with a profit because our stop is greater than our cost. And if I go over to my spreadsheets over here and I go to EFT trades, here is XLE. We paid $81.45 for it. And our stop is currently at 86.74. So that's the goal, is to always continually raise up our stops until they are at a price greater than our entry price. And then we have a no risk trade and we can just ride it for as long as we want to ride it. The reason I look at support and resistance, let me go back to support and resistance for a second. And let me go to, I want to show you something that's important, since I always talk to you about support and resistance. Wrong page here. Let's go back to graphs and let's go back to XLE. That's the par. There's XLE. Okay. If this really isn't resistance, but if we had resistance right here, then I would tighten those stops even more, because it does happen a lot that you hit resistance, you bounce down before maybe you continue a trend. But I do always watch support and resistance to see how close we are to an area where it might turn around and come back down, if that makes sense. Let's see. Here's Pakar. There's our stop here. Excuse me. We had a really nice day today. I mean, we gapped up and then continued to go up. So we continually raised our stop, and that's what we do. In Iridium, we just went in that today, and I've already raised the stop once. I had to raise the stop because you can see the ATR dot went higher, and the price had a really strong day on Iridium. So that's how we do it. We try to pick the very best stocks based on technicals and fundamentals to go into, and then we manage them. The hard part is, I would say they're both hard parts, but we try to find the best stocks to go into. That takes a lot of time because there's 9,000 stocks out there. And we try to find opportunities that we really believe, whoops, here's our holdings in this one, that we really believe have some momentum behind them, and they've got good earnings and they've got good management. And then once we find them, then we manage them, and we manage them with stop management. And that happens every day. Actually, during the day, it can happen as well. So we're doing well on these, on the ETFs. Like I said, we're doing well on a couple of them. This flyer that we took just in group one is not doing well, but that could turn around next week. It's either going to turn around and get positive, or we're going to get stopped out of it. But the other ones look good. So we'll just continue doing what we're doing. It seems to be working. The reason we're not fully invested is because we're not fully in a bull market. We are slowly stepping in. We are more slowly doing this in group two accounts. Group two doesn't have Picard. Group two doesn't have Iridium. Group two didn't have, and they're happy they didn't have, the Qs. Group one has all of those things, and it's really, our stocks are helping dampen downside performance and give us a little bit more upside performance. But as the trend develops to the upside, if it develops to the upside, which we suspect it will, this is the time of year that it's going to happen, if it's going to happen. We've already talked about that in prior videos. We will continually add stocks. And then once we get into a full-on technical bull market, both portfolios should be 100% invested so that we can just take advantage of whatever the market is going to give us. That's what we can do. It's funny, I just noticed this sail on my picture. Most of you know that I'm a very avid sailor. And I hope this ends up being a good analogy, but wind is somewhat like the markets. You really, you can't control it. If you feel the wind starting to pick up, you unfurl your sails and you ride that wind as long as it lasts. And when it dies, you roll back up your sails, you furl your sails, and sometimes you have to go to an engine, but it's very similar. You just react to what the wind is giving you, you react to what the market is giving you, and then you manage to make sure that you're safe in the journey, if you will. Again, not sure if that's a good analogy, but I'm longing to be sailing because we're moving into winter and no sailboats in sight until next spring. So anyway, with that said, I hope you have a great week. If you have any questions, just shoot me an email, give me a call, schedule yourself on I'm always here on my schedule for Zoom appointments, and hopefully all of the things that seem to be converging to push this market higher will happen starting next week. Of course, on Tuesday, we had the midterms. Remember, markets don't like uncertainty. They don't really care about the outcome. If it's Republican or Democrat, they just want to know. So, we could see some sideways action Monday, Tuesday, and then whatever's going to happen is probably going to start on Wednesday, but we'll see. We'll see. It could be a very interesting week next week, and we're just going to continue to build out our portfolios and try to take advantage of what we believe is going to be a bull run, but we're going to play it either way. And we have all of our stops in place in case this market turns the other way. So have a great weekend. Please contact me if you have any questions. Always here. Talk to you soon. Bye-bye.